To start off the rest of the investment platforms, these first two investments are well adopted around the world. The other three are less desirable and are only mentioned so you know your options. As always, if you're knowledgeable in your specific market, you can profit. First is foreign exchange. This market fluctuates like the stock market, but less people know how to read the trends. Foreign exchange is just the trade of different government currencies, and as long as nations are trading with each other, this market will continue to go up and down based on global events and public opinion mainly. Just like all other investments, do your research and then buy low when the value is there and then sell high when it's above the real value. Gold has been the standard for currency for thousands of years and more than likely will remain longer than many other forms of currency. Besides being shiny and nice to look at, it has different properties that are used in all sorts of things including computers and even medicine. It's one of the few currencies that have a value besides just being a currency. In most cases, people use gold as a hedge against the US dollar, so when the dollar is strong, gold is weak, and vice versa. So just like cryptocurrencies, in a way, you're betting that the US dollar is going to weaken in the future versus stay strong. One thing to consider is the US economy has been going up for the last 8 years. Most cycles of the entire economy last 5 to 6 years, so in a lot of ways we are kind of due for a downturn. In fact, we are in the second largest period of time without a shift, and if we go another year like this, it will be the longest. Nothing lasts forever. Peter Schiff, CEO of Euro Pacific Capital Inc., mentions the two best companies to trade gold are Gold Money and Manet. Gold Money is a platform where people can trade pieces of ownership of gold that is in a secure vault, so it's similar to cryptos with real gold backing them. Manet is a jewelry store that only uses 24 karat gold and is the only company that will buy back your jewelry at whatever the market is at any time in the future. So if you buy it and 5 years later it's worth 50% more, you can sell it back to them and they'll purchase it at full price. Because this type of investing takes years to play out, it may not be wise to invest here unless you have a good reserve of money or a direct passion and some good research backing your investment. The third is bond ladders. This is low risk and low reward. A bond ladder is essentially buying multiple bonds that expire a year apart from each other, so you can create a consistent annual return. There are various kinds of bonds depending on the industry, and some are government issued. One big thing about bonds is that they are not fully guaranteed, so you can have a loss in value in bonds. Most people who invest in stocks have bonds as a secondary investment, and historically they give 2 to 4% return. As interest rates go up, bonds go down. Interest rates are still low now, but they are going up, so this is probably not the best option. Fourth is certificate of deposits. This is one of the least sleek and sexy investments out on the market. It's very low risk and very low reward. Right now, CDs are only offering 1.5 to 3%, so as of now, it doesn't even counter inflation, so it's not wise to sink your money here. And last is oil and gas. The pros are there are some extremely large tax advantages, and as long as humans are using gasoline and natural gas, there is a market for this. The cons are renewable resources are becoming more popular. Most people agree that humans shouldn't destroy their own planet, so probably not the best option long term. No matter what path to wealth that you decide is for you, just make sure that you are constantly learning in that field to stay ahead of the competition. Applied knowledge is power, so get to studying and then apply what you're learning. Your awesome future awaits.